Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So after the biggest down day of the year, market had a decent snapback. It started off a little slow, then it started to build, and I would say a decent showing by the bulls. Definitely puts a few question marks out there, in the bears' mind. Can they just short any rally, or do they have to really, be a little bit on the defensive? Because right now, I wouldn't say it's their ball to lose, but they better protect certain areas, because if the market keeps continuing this way, you're going to see a lot of people say yesterday was the correction. And for me, I'm not sure yet, but there were some positive signs today. I came in a little long. I sold my longs, on the open, and then there was a few trades you could have built on if you weren't long. But again, I think the easy part of the rally, which is never easy, but that's what we spoke about this morning. I said 1350, 1354. If you're trying to play an oversold bounce, that would be the easy part. That would be the snapback. That would be to work off some of the oversold condition with the McClellan oscillator that was like negative 80. Now I think it's only like negative 30. So it still has some more room to go back to zero. And then we talked about 1357 to about 1359. That'll be the area of the retest that if the bears want to see continuation to yesterday's move, if they close above there, all of a sudden I would feel uncomfortable if I was them. So if you take a quick look at the chart, here you go. This was Monday's action when we closed below the 10-day, and then this was yesterday. This is the big down day, the biggest down day of the year. If you guys remember, this was an area that we spoke about on the chart. This was at 1340 to 1341, and it held yesterday. The question was, were you going to get some more follow through to the downside? And today the market opened up a little bit and slowly built all day. So to me, this was part of the oversold bounce. And now the question is, as we retest this broken area, do sellers come back in, okay, and then put a lower high versus area and then turn lower? Or do we just go sideways, break above, and make it as if it doesn't exist? That's what I'm going to look at. And I'm also going to look at, all the leaders to see. So as far as those retracement rules, as of right now, we've held pretty successfully the 25%. Okay, so if you go up here and you look, we talked about the 25% retracement, which comes in right here. Okay, 25% retracement. So from when we ignited on this day and started this accelerated uptrend, this is your first down move. We held the 25% retracement, and if this holds, that's a really strong market, guys. That means the composure stays the same. I was really hoping for maybe a little sideways, one more leg lower to the 38.2% retracement, which is also the 50-day moving average, which is around 1320. But I think a lot of people were hoping for this, and if everyone's hoping for something, it never happens. The market tries to make as many people as possible feel stupid or not be involved or chase. So all in all, if you covered yesterday, which was a decent risk reward, and you saw that on the virtual trade floor, I covered my shorts. I'm being transparent. Some guys in the Twitter sphere, they're like, you have to really talk about your positions. You have to say what you're doing. You know what? I say what I can on Twitter. If you want to have full disclosure of what I'm in, what I'm out of, you have to be a virtual trade floor subscriber so you could see them as they happen, and you could also listen on the radio. But as of yesterday, I said I covered my shorts, went long a little Apple overnight, to have continuation on the trade, as well as LVS, and then intraday, the spiders had a nice move into the gap, so that was good for cash flow. That's all I was looking to do. I'm looking to, create some cash flow, actively trade until I get more data, then I figure out whether or not I want to put back 8 to 15 positions if we're going to resume the uptrend. And I'm not exactly sure yet, so we'll need more days to transpire. But as far as some of the action, it was pretty constructive in some areas. First things first, I got to talk Apple. Yesterday, negative to positive showed relative strength. Some people took it overnight. You made $5. Congratulations. And then the news came out. I think the iPad 3 is going to be unbelievable. I actually have the iPad. I try and put myself in the shoes of other people. I have the first one, and I'm trying to think of how I could tell my wife how I want to get the third one, but she already has iPad 2, so what do I do with iPad 1? Chase is only 3.5, and he only plays the games on it, so I can't really give it to him. But anyway, I think a lot of people are going to be in that little predicament. Do they do what they did with the iPods, where you could have an iPod for a year, then it wasn't a big deal. You get the other one, you get the next one. But anyway, with that said, I don't think they had to wow everyone. They did, it was as expected. It sold off, and then it went down $5. I sent out a quick note to the Twitter sphere. If you're short, cover a good area, and then it went positive. And if you look here, you'll see, all in all, Apple needs to do a little bit of sideways action. Okay, this is when it opened up. It almost retested this broken little line here. You remember that 342 area, you know, where the 340 area. It went up there and couldn't get through it, and then came all the way in after the announcement and closed with a doji. So that means it's got to go sideways. So for me now as a trader, what I think is going to happen is I think it's going to wedge, okay, because it's got to absorb what has been an unbelievable move since earnings. If you've been a member of the site, we talked about the buyable strategy after earnings. When it held the earnings gap, this was your buy. You know, then you could have obviously, got involved here for another core trade. Fast forward, here was that outside day that held the 10-day. Here was, a bit of a correction into what was just a major event, and Apple tends to do that. So now it's got to wedge a bit here, and if you're an uncommitted trader, you could trade it. Now you have today's low as a point of reference, and then you have the low from Monday, which is right at the 20 days. So we'll see. What tends to happen is the volatility restricts, and then we get a move in either direction. And to me, I really think that'll tell us whether or not we continue to the upward trajectory of the market, or we correct a little bit more. But all in all, I'm glad this is out of the way, so now we could just trade the price action on Apple. As far as the semis, really strong today. A lot of the Apple offshoots did well. Stephanie was talking about Broadcom, buying it on the dip. If you look here, Broadcom had a nice day. We spoke about it today on Morning Call too. If you look here at Broadcom, it held the 50-day. It broke support. If you sold it within this area when it went below the moving averages, maybe you bought the dip, and if you did so, you have some room back to the moving averages as resistance. Intel yesterday held the 50-day and closed pretty strong, and now it's back into this channel. So with a bit more sideways action, this looks pretty good. If you were holding it on a macro level, I do think it has higher prices. It held this uptrend. So a few signs. We said if Intel holds the 50-day and holds this, it's going to be hard for the market to go lower. If the semis, bounce pretty well off of this 50-day, we could have a nice bounce. But now the question is, will the semis take back this broken trend line? So that's going to be, the situation where if you covered into the weakness, maybe you sell here and you retest shorts. So this will be like the battleground there on the SMHs. Same thing with the IWM. Actually not really the same thing. It's still showing some weakness. It's now below the moving averages, which will be resistance. Let's see if this could come up and retest it, or if it doesn't, you'll really know how weak this group is, and that also could be a leading indicator. So we shall see. The banks had a nice bounce. Unfortunately, I didn't follow my plan, and I didn't buy in the area I wanted to for JP Morgan. I was trying to be a little risk averse. I was talking about 39.20 down to 38.65. We hit 39.20 and I didn't pull the trigger. But if you look here on JP Morgan now, another reason why the market might have trouble going down, that if this is where we held. So JP Morgan held the 10-day moving average. Here's a 20, here's a 50. That shows you some strength, guys. Talked about for a trade buying Wells Fargo into this support. It came a little bit off the highs, still below the moving averages. So we'll see, how it handles this. If it can't get back above this area, so if you want to treat this as like a channel, here's the top, here's the bottom, here's the halfway. If it stays in the bottom end of it, perhaps that could create weakness, and we'll watch that. So for clues, Goldman gave you a little bit of a snapback. I think that it's definitely a tricky trade. Perhaps it tries to fill the rest of this gap, and then you'll see how it acts there. It's just a trade, and right now it's you have this support to trade against. It's going to take time before we try to figure out a breakout type trade like what happened here. So we'll see if it can get above that. Bank of America bounced off the bottom end of this lower range and actually filled the gap. So it's still hanging tough. Look at the move it had. If you're a macro investor, this is why also, if you switch gears for a second, we talk about two time frames. We talk about macro and we talk about momentum trading. Okay, I consider myself more of a momentum trader. I held multiple positions for that 2-month time frame, and when composure changed, I said, you know what, I'm going to switch because I want to be short, and that's what I could do. I'm a professional. But as a macro investor, if you can't get out of all your stuff because you're probably not going to get back in. So that's why we talk about going to a tier 1, which means lighter. Okay, not tier 2 or tier 3 when things are looking more clear and you could stay with it, and you have tradable patterns for cash flow, and you have your macro long-term view. Because right now, if that 25% retracement held and you got out of all your stocks, as a long-term investor, it's harder for you to pull the trigger versus an active trader that could just press a button and readjust, which is what we'll do if I start to see more data. But we have the big deal tomorrow concerning Greece to figure out whether or not they're going to be able to get the approval, which it seems like they're saying today they will. And then you obviously have the jobs number on Friday. So a lot to look at and a lot to see how the market reacts to. As far as Amazon, it's still in the lower end of the range. I sold my puts and lost half my premium because it did not break this area that I thought would get some downside momentum. So it's just showing you how you're not finding downside momentum. Same way Bank of America couldn't break support, Wells Fargo couldn't break support. Even though this is weak, it still hasn't been able to break levels and continue lower. You're still in this sort of lower channel. So for me, I'm just going to wait. If I want to lean on this short, I'll wait till this breaks, and if it doesn't, who knows? Maybe I'll just switch gears, and if the market continues, it could be ignited and along right there. But all in all, it's a tough trade. Google's somewhat of a tough trade too. Still, pretty sloppy, guys. This was after the earnings. Here is where the earnings to the downside. At this point, there was a 200-day good spot to cost average and more. Remember, we had that trade into the gap. Nice 2-day cash flow trade. Ever since then, it's been really choppy. Yesterday, they definitely shook the tree a bit, but came back up. So it's still in this channel. It still needs time. I still think this will be higher and take out these highs at some point this year. But again, it's March. It might take next quarter. It might take the next quarter after for earnings, but we shall see. At this point, I traded very selectively. I'm not just sitting in Google because it's just too sloppy. As far as LVS, that was something I did take home yesterday overnight with the virtual trade floor. Nice little snapback today showing you how you could time these things. Not a blockbuster, but something to do, some decent cash flow. This was the buy. Here is your sell setup and maybe short. And now, filled the gap. So I actually sold it on the close because that's all I was looking for. I was looking for a few percent, and that's what it had. It could have done the same thing with Win. We did a video about this on how to buy into support. At the point we talked about, I think 118 to 120, and that's exactly where it came into yesterday. The low yesterday was, I'm not exactly sure. Sperling targeted that one, and I targeted LVS, but this one went as low as 118.60, right into the area, and then you got $3. Nice little trade. And now, with more time, we'll get another tradable pattern there. GLD, we talked about how it could go back up and retest that 164, and that's sort of what it did today, right? It went to this previous point of reference, right? So if you wanted it as a trade, remember that 164? It reversed off the lows. Some people took it long because it made sense after a huge move like this, especially since you have you have room for an oversold bounce, and you got paid a little bit today. Some days you just got to hit some singles. This is this is almost like taking a walk, on pitches. But anyway, here it did. It filled the gap, and now let's see what happens from here. If you're not committed to gold, this was just a nice little snapback trade for you, and then we'll see. And I talked about this pattern yesterday. It still needs more time. It needs more clarity. But if you're thinking they're going to start printing money again, if you're thinking we're going to get QE, if you're thinking that we're going to have a problem with currencies, and I'm not quite with that thesis yet, this could be some vision here. This could be the start of a inverse head and shoulders pattern, and here's your neckline. But it's going to take time. So if that's the case, be in your tier one, and then we'll see if there'll be more clarity. If gold at some point could take out this area, I think it would be more bullish because that would show me that this potent down day is not in control of the move moving forward. So we shall see a lot of time between now and then. As far as like Zynga, nice little, there's like some one-off trades. If you take a look here, you'll see that it bounced off that 13, which we talked about, and then it gapped up and then reversed. At this point, I think it needs more time. Pandora was just crushed today. I just think that's why IPOs, you have to wait for a few quarters because you don't know what's cooking here, and this is going to take a long time. I will not be interested in this stock probably for months, who knows, quarters, until it were to break that, or for some bottom feeders maybe here, but I think it's not worth your time. Remember that Yelp? Horrendous. Look at that. We talked about if it couldn't get above 25, you go to the 60-minute chart, it's just not worth your time. It couldn't get above this. It couldn't show any demand. Remember we said get away from it. It was a horrible IPO. Well, look, pow, and then it actually even broke that range, and now it's all the way down here. I guess, if you're a micro trader, maybe for cash flow, you look at this tomorrow, for a quick little snapback. But overall, this is why you don't get sucked in on the first day. There's an art of trading the first day of the IPO, and then you get away from it. If it would have went above 25 and continued, maybe there was a few-day move there, but this is horrendous. Okay, yeah, if you got a stock on the deal and you flipped and you're in part of the syndicate team or whatnot, you made money. But as far as a trader, you need to know where you are in the food chain. And in the food chain, there was nothing there unless you were able to short it somehow, which you're not allowed to do on my system yet. IPOs, you need a certain amount of time before you could short it. As far as the OAHs, a little bit of a bounce off of the 50-day the same way here. I think that if you did put some back on at the 50-day, because that's what you do with your plan. A lot of people do add stock on their 50-day. See how it handles this area. Perhaps you get a bit of a bounce back, and then we'll see with more time if it could start to continue up to the upside again. If you look here overall on the smooth trend line, it's still intact from this low. So this shows you that this isn't a powerful group. It's just something to hold as the year progresses if you have a bullish case, and which I do. So I don't think that this is the high of the year, but you have to know your time frame. So with all that said, I'm sorry, I got to get going quick. I'm co-hosting CNBC Asia World Market. So if you get that on the satellite, or if you're from Asia or Sydney or whatnot, I'll be there from 5 to 6. There's 3 good guests. I'm going to be answering, asking some good questions, talking about my thesis. So tune in from 5 to 6, and hopefully you'll see me there, or I'll see you tomorrow morning at the call. Have a good night.